Welcome back to the show this morning. I'm Real Science Roberts. Danny Ratliff, certified financial planner, joining me this morning. Talking about the world as we know it. It's Wednesday. So every morning, Britt puts a little comic or something up on my notes page. And so today's comic is, Lance is a pretty uncommon name these days. But in medieval time, people were named Lance a lot. That's just stupid.
You're welcome. Oh, man. Where do you find this stuff, Brent?
I don't know. Anyway.
I have my sources.
I think you made that one up. Anyway, a couple of things this morning. So I was talking about earlier in the show this morning, and again, if you're listening, on the radio, we appreciate you as always. But we also have a live video stream that we run out through our website at realinvestmentadvice.com. Goes to YouTube channel as well. So if you subscribe there, you can see the live stream. This morning, I was talking about the CBO and the Congressional Budget Office and their projections for U.S. debt, because we just continue to pass these continuing resolutions. We no longer run a budget anymore. And these continuing resolutions expand spending by 8% every time we do this, right? So it's just these continual increases in spending, which requires more debts to fund that, right? But you can see all the charts and graphs, on our live stream. This also goes into the impact of the money that we've been spending to help support the economy post-pandemic, right? We've had these, $1,200 checks to households. We've had extended unemployment benefits of $600 a week. Well, those all ran out over the course of the last month or so. And if you take a look at credit card spending data, I just posted a couple of charts out on Twitter this morning. If you take a look at credit card spending, that's had a sharp decline, obviously, because people have less money to spend. Also, we're already starting to see a downtick in things like retail sales. Core retail sales were negative at the last print. Those are likely to get worse, and you're going to see some weaker economic growth. Another issue that we talked about previously also is that by keeping all the kids out of school, that a lot of households are two-family working households, right? The mom and the dad both work, right? They need two incomes in order to make ends meet and to live their lifestyle. If kids aren't going to school and you have young kids that can't, fend for themselves, then somebody's going to have to either work less or not work at all and stay home with the kids. And there was another chart out this morning showing exactly that. We've talked about that over the last several months, and there was a chart from the Wall Street Journal, I think, this morning, that they took a poll and they said, well, what are you going to do? And they said, well, one of us is working less or not working at all now to stay home with the kids. So the importance of that is that has an economic impact, right? Less people working in the economy. That means less income, less spending. It also means less activity in the economy. So, and you get slower economic growth. So all these things are leading up to the idea that the economic growth rate, now we're about to see a 30% bump in GDP. Okay, for the second quarter. Not surprising. When you do $1,200 checks to households and $600 a week in additional benefits, you're going to get a big bump in GDP. That's what we saw. But that's going to slow down markedly in the fourth quarter unless we start to do something else. So this is where we are. Now that we passed this continuing resolution, the question is, are we going to get another CARES Act and get more stimulus support? Democrats still want $1,200 checks to households. That's their big plan for universal basic income to households. Republicans not so much for that. Democrats want $600 a week to UBI benefits just across the board. Republicans not so much. So that's the fight, right? That's where we are. And unfortunately, as we talked about in yesterday's Technically Speaking report, because of needing to pass a continuing resolution. Now, that's been passed by the House. It's still got to get voted on by the Senate and approved by President Trump. So it's not a done deal yet by any stretch of the imagination. But that's one hurdle that they've got to get over. They've got the election coming up, and now the whole fight over Supreme Court Justice Ginsburg's replacement.
It's kind of interesting to think right now, in fact, that typically the election is decided several months leading up to it, and based on the economy and the market. And so one of the things that the Democrats are pushing for is that $1,200 stimulus, like you mentioned, the $600 with unemployment benefits. And we looked back, say, in April, because I think those first stimulus checks were paid on April 17th, and we saw a 10.6% increase in personal income. We saw spending shooting up. We saw a lot of $1,200 down payments on new, nice luxury vehicles. And if you want to prop the economy up, this is a great way to do it in a short-term perspective. Now, longer term, there's going to be other unintended consequences that I think they will be paying for a large number of years here in the future. But to do something right now would actually probably be beneficial from an election standpoint for GOP. So I'm kind of shocked that they haven't pushed for a little bit more. We're actually fiscally conservative for 2 months now?
Right.
So I guess you got to do it sometime. Election's coming up.
Well, what's interesting is that the Democrats really played this backwards.
Yeah.
If you wanted to get rid of President Trump as president, right? And so let's assume you're the Democrats. What they should have done is become fiscally conservative and say, and vote against, providing any support to households. I mean, make the economy as painful as possible, because people will vote for something different at the polls. And so you make the economy super painful for President Trump, and then Joe Biden goes on the campaign trail and says, look, if you'll elect me, I'll get you checks to households. I'll get you expanded unemployment benefits. We'll get you money. They actually played this very backwards, because they've actually helped the economy, helped the market, which actually makes it better for President Trump to be reelected as incumbent. That's what statistics say. I'm just talking about statistics. That's what they say.
Well, when you look at the numbers, and 5 out of 6 recipients who were on unemployment were actually making more money than when they were employed.
Right.
So, of course, everybody says this is great. But the other issue, I think, is that, on both sides, you're seeing a lot of pork put into these bills that's so difficult to vote on, where you could say, I can never, in sound mind pass this. Because, all we see is what's on the surface. You see the headline news, but then you start to, don't worry about it, pass it so you can read it later. And, all 1,800 pages of whatever bill it may be. And then you start to see, oh, shoot, this is not what we thought this was. And so I think that's why they have such a hard time, swallowing that pill to say, okay, let's go ahead and do this.
Right.
But it will be interesting to see, because, leading up to this is going to be crucial, I think. We were talking a bit ago about Larry Kudlow comes out and says, we don't need any more stimulus for the V-shaped recovery. Well, I don't know what recovery he's looking at. I mean, I think we're more like the K-shaped, where, the haves and have-nots.
Right.
Where you have a lot of people who are benefiting from this, so that income equality gap is certainly shifting or getting wider and wider. And then you have a lot of people that are really being impacted. And I don't know about you, Lance, but I am actually right now hearing more and more, like almost daily, about new people who are unemployed.
Right.
And this is going to be a big issue moving forward, especially as we have that first round of people who are laid off coming off of unemployment benefits. Now you're going to have a whole nother group coming on to them. And then that's not to mention all the people whose retirement plans were changed drastically. You talked about economic activity. Think about all the people who they're 60, 62, 63. They thought they're going to work till 65, 70. And now all of a sudden their plan has changed dramatically. Well, those couple years of work really impact your overall financial health. So we're going to see a lot of people making, shifts in their economic activity, where they're spending money, what they're doing. And I think that is something that we begin to start to see.
Right.
And that's what's we're,
well, and talking about Larry Kudlow, he's and this is the problem with government, because they don't really look at the data. And he's talking about, he says, we don't need more economic stimulus for V-shaped recovery, but I do think we need some money in some targeted places, like more money into the PPP program. So that was the payroll protection program. There's still money in that program. First of all, it was rife with fraud to start with. The second was that there's still money in it. The uptake in these programs, even the Federal Reserve is trying to defend the lack of uptake in their Main Street lending program, which was a program designed to lend to small businesses. There's no uptake in it. We talked about this yesterday, is that if you're on the verge of going out of business anyway, you're not going to take on an additional loan in a lot of cases, or you're not going to take on additional debt. If you're kind of making ends meet and you're surviving, you're doing okay, you're not going to take on additional debt. So there wasn't really a need for those programs, but this is the go-to program that government sees. It's like, oh, we'll just throw more money into this bailout program for businesses. And then they make these astonishing claims like, oh, the PPP program saved 50 million jobs. No, it didn't.
Yeah, but guess what? None of the banks want to lend anybody money. That's why that Main Street lending is like, what, 0.02% usage?
Yeah. And the problem is your process of bailouts, but bailouts don't work if they're not used properly. And this was the whole design of the packages were wrong. The way it was done was wrong. And again, we go back to the other side of this, is that, a lot of these businesses that we were bailing out, public corporations, et cetera, They had access to capital markets. They didn't need bailouts. We wasted billions of dollars in bailouts on companies that had access to capital. They just needed to get to market to do it. Anyway, be right back after the break. Don't go away.
Moving to the grooving, and just when it hit me, somebody turned around and shouted, "Play that fucking music, white boy. Play that fucking music, right."
Get daily investment news you can use, delivered at the speed of the internet. Sign up for the Real Investment Report now at realinvestmentadvice.com.